Hi, I'm Andrew Cannane, Executive Director at Intertrust Group and Vice President at the PFA. I'm delighted to welcome Tim Slattery, CEO of APN Property Group, a specialist real estate investment manager and a long-standing PFA member. Tim, how have you seen capital raising in the listed versus unlisted space?
Thanks for having me, Andrew. Look, it's really been a tale of two halves in the listed market for 2020. I mean, we really went from not much happening other than some really distressed, deeply discounted equity raisings to shore up balance sheets for the first part of the year. And then, as we got some more clarity around the COVID situation, we saw more, more issuance for acquisitions at much tighter discounts. On the other hand, the unlisted space, while there was a period where it was pretty much down tools on all equity raisings, we've continued to see pretty solid demand across the board, both for a range of different products. I think really as people are looking for a reliable source of distribution yield. So that's really what we've seen this year.
And which asset classes are you seeing most in demand?
Look, it probably doesn't come as a great surprise, but if you think about what's happening in retail property and shopping habits, I guess you'd say that's a structural trend to online, but then really accelerated with COVID. So that's borne out with huge demand for industrial logistics properties, and on the other hand, a very significant oversupply of shopping centre assets on the market, and that's really reflective of the capital demand and who's chasing what assets. Office is probably somewhere in the middle, and really the question now for everyone is, well, with where values are, do we see a reversal, or at what point do we see a reversal in fortunes and attractive entry prices for those three asset classes?
And moving to the investor side, which distribution channels are you seeing as being most active?
Look, there is, I think, strong demand across the board, but I think the big change that's happened across the industry is what we've seen post the Hayne Royal Commission, with a very significant number of advisors leaving the market, upwards of 20%, which is, I think, is basically what happened in the UK following their review of the industry. So that's a significant change, but certainly from our institutional investor clients, as well as our independent financial advisors and direct investors, there's still very significant demand. I think people are very much looking at reliable income streams, and their options are limited if they're after a sustainable distribution yield with cash and bank dividends, really not measuring up of late.
Tim, thanks very much for your time.
Thanks, Andrew.